All right, guys, I'm back. This will be the second video in the series on avoiding bad real estate agents slash lenders for military, active duty, veterans, retirees, you name it. So, let's just jump right into it. First thing is you got to understand that, excuse me, all lenders are basically VA. Well, what do I mean by that? I mean basically that all lenders do VA loans. It's kind of like a gas station telling you that they sell regular gas and premium gas. And then you pull up to one gas station, they're saying, "Oh yeah, we specialize in premium gas." Now, know what you know, you would say that, well, all gas stations sell premium gas and regular gas, or else you wouldn't really do much business, right? And they would tell you, yeah, but we're the specialist. And you would go, well, what makes you so special? That we sell premium gas. And then you would go, well, this is just sounding kind of scammy. Next gas station, right? Well, because of your lack of knowledge, um, banks basically do that for military. They say, oh, yeah, we are VA loan specialists, blah, blah, blah. And it's just another loan package that all banks do. But we, as military, being naive, usually it's our first home purchase a lot of times. And there's always the next E1, E2, E3, 4, E5 that's finally got promoted, finally ready to be the first one in the family to buy a home or whatever, right? There's always another one every year, every month actually, because boot camp, they churn out new recruits or new soldiers, new sailors all the time, right? So there's always the next guy and gal coming up that's just as not knowledgeable about real estate as we once were, right? So they go up to the bank, and the bank says, "Yeah, we're VA loan specialists. You know, we specialize in VA loans." Blah 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 blah. Not saying they're necessarily a scam, but just realize it's just a clever marketing ploy for them to get you to choose them over the competition. That's all it is. It's kind of hard to be a bank and not do VA loans because military in a lot of markets, um, it's just they're like a large percentage of the real estate transactions that happen. So if you're near a huge military base and you're buying a property, best believe you account for a large percentage of the real estate transactions that happen in that market. If the base was to move away, I guarantee you that market would shift noticeably for everyone involved, right? So just recognize that if you're in a place, that's got a huge military base, all the banks there do VA loans. Don't let anyone fool you with the marketing that, oh, we're VA loan specialists. And so you go, well, we're going to go with Mary because she's a specialist, even though we really like Bob, but Bob's not a VA loan specialist. They all do it. Some people just choose to use that marketing tactic, some don't. Right? So just understand that. All right, so how do you find a great lender? Well, there's always that bank that we all sign up with in boot camp because that's the quickest way to get our paycheck, right? And they're the only ones that have access to us while we're still going through that indoctrination process in boot camp. Those banks, they're all right. Some of them, not so much. I can share with you that there have been some horror stories. So let's just say that just because you've been banking with this bank ever since boot camp, they've got all your money, they got all your wife's money, your husband's money, yada yada yada, doesn't mean that they're the only option or that they are necessarily the best option when it comes to using your VA loan. I can tell you personally here in Hawaii, um, there's actually a quote unquote private lender. I guess you could say private, just they're just not a credit union. But all they do is specialize is in mortgages. So they don't do like car loans, they don't do personal loans, they just do mortgage loans, and that's it. And they are very competitive with those larger banks that you would recognize that most most military people have. So I can tell you from personal experience, for one, there's usually a difference in service. All right, so if you go to a big bank, big credit union, or something like that, it's an 800 number that you're getting, right? And it may not necessarily be the same person that you're talking to all the time, or it might just be email, right? But you're not going to be able to call them up at 7 o'clock in the evening, depending on where you're located, and say, "Hey, Bob, Mary, I got a question on this. Can you explain a little bit more?" Or yada yada yada, right? You got to work around their hours. So that's one disadvantage. Um, Two is the professional service. I mean, you go with someone that's smaller, and the smaller doesn't necessarily mean that they're lacking capacity or lacking skill. It just means that they're not a national or worldwide company, if that makes sense to you. They just might only do business in your local market, and that's great. They can compete all day long. And rest assured, whether you do a big bank or a small bank, your loan's going to get sold off to some third party company that you don't know the name of anyway, and you're just making your payment to either to your bank and they're sending it to them, or they might even send you a letter saying, "Hey, your loan's been sold, and now you will send your checks to this company or that company." So don't fall into that fantasy of just because it's a big bank, somehow you're getting a better deal or you're getting better hands. It's just not the case, right? A lot of times, a smaller, more niche or boutique firm, if you will have that personal touch and have a professional that you can go and shake their hands, sit down, have coffee with them, ask all the questions that you want. You can text them anytime, day, night, email, and expect a response within a reasonable time. And they will bend over backwards for you and do things that the big bank would not do, especially if you have, let's say, questionable credit, or you got something on your credit history that may not look in the best light for a person trying to get a mortgage loan. They'll be able to help you explain that in the best way. They'll show you what to do and help you get more money for the same pay that you already have. So just understand the difference between those two. Now, as far as finding them, it's the same old song, right? It's going to be a lot of times referrals, right? So if you picked a great agent, your great agent will always have a lender that they work with, or maybe one or two that they recommend, highly recommend. Just recognize that legally, and I'm not saying it never happens, but legally, um, you cannot provide referral fees between realtor and a lender, at least not in the state of Hawaii. I don't know what's going on in other states, but I know in the state of Hawaii, I, as a realtor, cannot say, "Hey, because I sent you to go see Bob and Mary over there at some credit union. If you decide to do business with them and purchase a home through them, that they're going to give me some type of kickback, or they're going to give me some type of financial reward or incentive." That is not legal, and that's not something I do. I can't say it doesn't happen under the table, because you guys know business and anything else in life. Sometimes people follow the rules, sometimes they don't. But that is the law. So if you got a great agent, they're not going to be doing that. At most, you can rest assured that if that loan officer or lender does have any potential clients that are unrepresented, they will send them to that realtor, of course. And obviously, in return, the realtor, if they have any clients that have not firmly made that decision on who they're going to use to purchase their home, then obviously they're going to refer them to their favorite lender or banker. So that at most, that should be the extent of it. For me personally, as a realtor, I have my own personal lender I recommend, but there's also the comfort I get in knowing that when you go to my lender and my lender says you're qualified for 600K or 700K or whatever the case may be, then I know for a fact that we're going to make it to the closing table when we open escrow with a seller. Or at least I know that if we don't make it to the closing table, it will not be because the financing fell through, which does happen a lot more than you would realize. Even with the larger banks or credit unions, sometimes they give you these pre-qualification letters and they say, "Hey, you're good to go for 700K. You get an escrow for something at 690, and then they're doing their real due diligence now, right? Because they really got to stroke the check and stroke that pen to sign the check, right? and then all of a sudden they go, oh, well, actually, you only qualify for 650. We can't do 690. You know, this thing or that thing popped up, and then now the deal falls through. You're hurt, the buyer's hurt, the seller's hurt, the realtor is frustrated, right? So that can happen. But I know with my lender that will never happen because she does all the due diligence ahead of time. So when she tells you you're good for 700K, you're good for 700K, and she already knows about the bad credit or the bankruptcy or one divorce and whatever could be a negative thing. She's already researched all of that. She's already discussed it with you, and she's already laid out a plan for you to be able to address that when the time comes. So for me personally, that's the benefit of actually having a lender, is knowing that my clients are going to be well taken care of when I refer them to it, and I don't have to worry. Um, the additional thing is I actually don't necessarily have a team because we're all individuals working for ourselves, but I do have an assistant. I do have a preferred lender, and when those two can work together, it streamlines the process so much more. You know what I mean? It's kind of like, how can I best explain this? It's like if you got a NFL quarterback and his favorite wide receiver, they've been playing for 5 years together. It's just gonna be a different outcome or a different vibe than if you threw a new guy in there for the quarterback and they call the same plays, right? It's just gonna be different because they understand each other, they know what to expect from each other, and the working relationship just makes it that much more efficient, right? So they're not trying to adapt to each other while trying to get this transaction done under the clock, right? Which is what happens a lot of times. So, another way, let's see. I'm kind of jumping around. Forgive me, I'm kind of jumping around this video, but it's all great information for you. Um, Another way to find a lender is through open house. Now, what I did when I first got here and I decided I wanted to buy, I actually went from one open house to the next, and I found that there were sometimes lenders sitting at the open house as well, trying to pick up clients. And that's not necessarily a bad thing. I don't want you to think, oh yeah, this lender's a shark. They must be really hungry or desperate or whatever it is. It's actually a good thing for somebody to take time out of their schedule to come and sit at open house on a Saturday or Sunday. There's a lot of other things they could be doing rather than just sitting open house. But to sit out there and sit open house to try to pick up clients, that really means they're at least willing to work, which is more than you can say for a lot of people in this industry. A lot of them rely on referrals and will not do anything extra to pick up business. So if you've got a lender that's willing to do that, then at least give them a shot. They may actually be the real deal if your realtor doesn't already know someone to have someone for you, right? So those are really the best two referrals. Look for them at an open house. Regarding interest rates, I know a lot of times you might think, hey, we want to go with the cheapest interest rates or the lowest interest rate. Just realize you want someone that's going to give you great service. Um, Interest rates, for the most part, are going to be very competitive when it comes to mortgages. You'll be hard pressed to find 1 or 2% different like you would with a car loan, just because it's such a big purchase, a big loan anyway, and it's really set by the feds, not necessarily by the banks. So what that means is the federal government sets the lending interest rates, meaning what the interest they charge to the banks to take their money, and then the banks, based on the money based on interest rates they're receiving to get the money to make their money, that's how they're determining their mortgage interest rates for you, right? So if the feds raise their interest rates, guess what? The bank's going to raise their rates and vice versa, right? So that's really how it operates. But in between banks and things like that, the services to me is a lot more important really than interest rate. I know you might think, oh, well, easy for you to say because you're the realtor. But I'm telling you, if you're at a 3.5 and another one's at 3.55, another one's at 3.51, right? Don't trip over those last tenths of a percent difference, because it really depends on when you lock in your rate, right? For one, Hawaii at least, it depends on how you lock in your rate, on what day you lock in your rate. So they can't give you an exact rate until you actually lock it in. And then two, there's all types of incentives, and it just depends on what day you actually are doing the rate lock in and things. You might get more credits, less credits, things like that. But you just want to make sure you got a lender that's got your back, that's professional, that's really going to do a great job for you. So that's the big key. Let me look at my notes here, make sure I'm not missing anything. Um, Yeah, that's the biggest thing. And so I guess I'll share with you a short story and how this has all worked out. Because, like I said, a lot of this comes from experience, either personally or stuff I've seen. So I did have one client that went with the big bank. I shared with her, I said, hey, look, I bank with them too, but I've just heard horror stories about them. And so I shared with her, I said, hey, work with my lender. She's great. She's awesome. I can vouch for her. And she said, "Nah, it's okay. I'm gonna go with the big bank." And what happened was, it took almost a week to get her pre-qualifications, right? Uh, and yeah, I asked her. I said, "Hey, well, what you're pre-qualified for? How much are they willing to loan you?" And she's like, "Yeah, I got a call." And let's say they gave her a number like 600K. And I was like, "Okay, great." But she had to call them, and it took over a week, right? So she was a little upset with that. She ended up talking to my lender. My lender did it in a day, which is pretty standard for her. And I think she told her like 650, another 50K more purchasing power. And so we ended up opening escrow with my lender. And then I think about a week after that, the big bank called her back and said, "Oh, by the way, you're actually not qualified for 600. You're only qualified for 400 because I don't know. They discovered some later information, and they went, "Oh yeah, you're not qualified for 600." I'm like, "Well, we're actually in escrow on a 650K property with my lender, and the big bank's telling her that she can't get 600, right? After making her wait a week, and she had to call them to find out, right? So long story